equipment financing for restaurants near me. Now, I'm going to show you how to get the best equipment financing possible. My name is Jonathan Federa. I've been in small business lending for the last 14 years, and I've helped over thousands of clients get close to $1 billion in growth capital. Now, I'm going to tell you, if you stay to the end, I want you to subscribe and comment guide, and I'm going to give you the entire guide on how to get into the best financing programs possible. Now, first off, why would anyone want to, get equipment financing near them? The truth of the matter is, most of the best deals you're going to get are going to come from national companies that this is all they do, right? They work with, various different businesses, and they specialize in equipment financing and equipment financing only. Stay tuned, go to the end of this, and you're going to get all the tips that you need. Now, the first thing you have to know is really how to get into the best terms, where to look. Well, you can work with us. We're a national company. We work with thousands of businesses to do this each and every month. Or you could go to the bank. The challenge is banks don't always have the right program, and they're not going to be as quick or as fast as a company that specializes in getting equipment financing done. And now, to get into the best terms, you have to make sure your application is super strong. To understand, to have a very strong application, you need to know what is needed to first off apply. So first, you're going to need a one-page application, and you're going to need the invoice for the piece of equipment that you need. All right, I suggest that you leave a deposit on whatever equipment it is, because a lot of places are having equipment shortages nationwide. So you don't want to wind up waiting. And if you do wind up waiting, it's pretty simple. We could do what's called a 3-pay, where you pay a reduced payment for the first 3 payments until the equipment comes in. All right, but after that, you're gonna need 6 months of banks, a tax return, a driver's license, a voided check, but that's all basic items, okay? The biggest thing is understanding what an underwriter is looking at. So first, they're gonna look at your credit. When I say credit, they're gonna look at your personal credit, and they're gonna look at your business credit. Ideally, on a personal level, you wanna have over 650, right? The higher the credit, the better. In terms of business credit, they wanna see established business credit and see what comparable debt you have. Comparable debt is just other debt that is similar to the piece of equipment you're financing. If you don't have it, don't worry about it, but it is important for you to start building it, so as you grow your businesses, it's easier and easier to get equipment. All right, next, they're gonna look at your time in business. The longer you've been in business, the less of a risk you are to borrow any type of financing, all right? And then they're gonna look at your cash flow. They wanna see, one, how much is coming in every month in sales. Next, after they look at that, they wanna see how many deposits. Since you're a restaurant, you should have a very, very high deposit count. They also wanna see how much cash you're keeping in the bank and if you're having any negative days. All right, after they look at all of this, they want to see consistency, and then they want to see if you have the ability to service the debt. So let's just say you're opening a new location, and now you need about $200,000 of equipment. They may request your tax returns to see how profitable you are. If it's under 150, a little cheat sheet, and you have really good credit, you can do an app only. So they won't even look at your cash flow. This is the difference between working with a bank or working with a pro. A pro knows how to get around and get you the best terms, while a bank is just gonna stamp it approve or deny. And most times, they're gonna take so long that you may wind up missing out on that piece of equipment that you're trying to finance. All right, now, why should you finance it over paying cash? The reason's simple, right? Cash is always going to be king. And the more cash you have, the more opportunities you can take advantage of. So, and also you can write off the financing. So there's really 3 types of financing programs. There's a traditional purchase where you're paying for that equipment over, let's say, 3 to 5 years, maybe 3 to 6 years. There's a lease where you're leasing the equipment. I don't like leases for a bunch of different reasons. One, a lot of times they have very, very tricky language in there, and they may auto renew you at the end, and you're paying double for the same equipment. Or you could do a lease with a dollar buyout. And the advantage there is you can usually write off more of that payment, not just the interest, and then buy it at the end for $1. But you give up the depreciation aspect unless you're doing a straight equipment purchase, which is primarily what we do unless someone asks for a lease with a dollar buyout. Next, you have to understand, the dynamics and make sure your application is put in the best light. So you want to be able to describe why that equipment's important to you and how much money you're going to be able to make with it. The more of a return that equipment is going to produce, the stronger your application is going to be. So what I want you to do, again, subscribe to the channel. If you're ready to apply and you need equipment financing today, write apply. If you just want the guide, please just comment guide and make sure you subscribe, because we go over SBA loans, lines of credit, working capital, payment processing, you name it. We teach everyone that subscribe to this channel. So thank you for tuning in, and I will see you on the next one.